What's going on, guys? Welcome into today's episode of Money Moves. As
What's up,
always, your
y'all?
host, Matty A, my co-host, Mr. Breedwell. We cover all things stocks, real estate, investing, and personal finance to help
Mhm.
you on your march to that millionaire status and beyond. If you are new to the show, welcome.
Welcome.
Be sure to hit that subscribe button so you never miss another episode. We do have these videos up on YouTube for you as well, so check them out there. And if you enjoy anything that we talk about, all we ask is that you leave a review in iTunes. It helps us continue to include more amazing people like yourself in these money conversations. Don't forget to take advantage of your free financial x-ray. Mr. Breedwell and his amazing
Come
team
on through.
will do.
We'll take a look at what you're currently doing with your investment portfolios or your insurances. We'll take a review at them. Again, the main thing, it's happened so many times this week. We have people that don't know what fees they're paying.
That's the biggest thing.
Yeah. Some of the biggest, if you are at places like Ameriprise or UBS or any of those other places that are high quality financial institutions that could never find a way to sue me, those are places you want to check and see what your fees are, because you have to remember, as an investment advisor, we have to bill you and put everything on your statement. So, to the penny, as you've seen on your statements, month,
Yep.
year, you know what you're paying. When you work with a lot of broker dealers, they just don't have to tally up fees the exact same way. So I was just looking at an account the other day, little north of a couple accounts, a little north of $5 million each, and they're paying almost 2% in fees.
Ooh.
I mean, that's like, holy crap, expensive. And it's all tucked away in expense ratios, and some of them are actually loaded, meaning there's front end loads on the mutual funds, which is insane on accounts that big. So
Well, and here,
just things you don't know, and
yeah.
it's free to find out. And then when you put them, normally what we'll say is, this is what we would do. Look at how much more money you can make because you're not paying all those layered fees. And we have a more proactive approach to our risk management or asset management. So those are the things that you would find out. And we have a high success of helping people and changing people's financial trajectory because of that.
Yep.
But you don't know what you don't know unless you have a third party that's not me, not your current advisor or your current company. And they're just going to say, this is what you're paying. This is what it's going to do. Here's the percentage of that plan working. And very black and white, cut and dry.
That was the biggest thing for me when I did the x-ray. And for those that are wanting to take advantage of this is completely free. We offer this to all our Millionaire Mindcast listeners. Just text the word x-ray to 844-447-1555. You'll get to connect with Ryan and his team. But I think that was the biggest thing for me. I was like, half of what you just said, I don't understand.
We found out your old advisor had like complaints filed against
Yep.
them, all sorts of like stuff. He was like, what?
Well, and there was just a bunch of additional things that weren't explained to me properly, and I didn't really understand, that you really just put in layman's terms and then had an actual plan that I could physically see
Yeah, not just investments.
and
What can the
comb
investments
through,
do?
that really made sense to me. So that was one of the main things that I really appreciated about Ryan and his amazing team, is they really do go through, take the time to really break down exactly what it is that you have, what it is that you're paying, and then also to give you kind of a side-by-side of what it could look like if maybe certain adjustments were made based on what your goals are. So that's there. That's available. Feel free to take advantage of that if you want, as well as all my accredited investors. If you're looking for passive income and deal flow, take advantage of getting on my deals list. I got one coming out here in Q2 that I cannot wait to share with you guys. And let's just say it is in the spirit of making money. Stay tuned on that one. But you can get on the list by texting the word deals to 844-447-1555. You like that?
The spirit of making money. Hey, we're all in the spirit of making money on Money Moves.
That being said, don't forget to take advantage of all the great tools and resources we have available for you guys at millionairemindcast.com. The new store is up. It's live. It's got all kinds of great stuff for those of you who are really looking to take your financial freedom goals and the tools that you use, net worth tracker, financial statement tracker, all different kinds of things that will really help you. Feel free to check that out. All right. So for today's discussion, we got lots of updates in terms of what's going on in the market. We'll get your take on that. We got unemployment. We've got inflation data. We've got all kinds of stuff that are coming out on job openings. And so you're going to be giving us your take on how the market is looking at that, pricing that in, and what some of the risks and concerns are, and or some of the good things that are happening that many people might be overlooking. And I think one of the biggest topics of conversation that has really been spotlighted in the media recently is the dollar, the US dollar falling off as the reserve currency of the world. And I've been sending you lots of stuff, which you've been so kind and generous by giving me your very candid thoughts on, by the way. And I think
Yeah.
it'll be something that's important for people because I'm getting more and more people that are sending us stuff worried
Nobody
about it.
sends me stuff because they don't want no smoke.
They're concerned about it. So we'll be talking about the strength of the US dollar and some of the things
That's
that you
funny.
can either be worried about and position yourself for, or don't get caught up in headline news and continue doing what you know best is aligned with your investment goals. And of course, lots of updates in terms of what's been going on in the housing market. So that being said, this last week, before we dive into what's been going on with some of the data reporting, White House is talking about an additional Ukraine assistance package to come this next week.
Yeah, they're also talking about how they're putting out a new transgender holiday, which I just want to take the stand and say that I think that's a load of bullshit.
Ridiculous.
I don't care about what your life choices are, because as long as they don't affect me or have implications on my life, but the stuff that unfolded, you know, that the timing of it was just poor. I mean, if the White House wants to come out and do that, it takes about 2 brain cells to figure out a better time than when a domestic terrorist, that's what you are when you do that kind of stuff, takes advantage of children and teachers at a private Christian school and murders them in cold blood because she has a mental illness. And yes, I said she because it's a woman.
3 days later, they
keep that in mind when you see the state of everything that's going on. This is the problem when politics become kind of like gangs. It's common sense just goes completely out the window. There's a lot of the transgender community that are normal thinkers, and they are not for that kind of stuff. Just like there's a lot of homosexual and bisexual members that are not for those type of people grooming children, which is getting more and more common. So just wanted to go out and make a stand and say something about that. We have a platform where we can get heard, and I think it's important that you understand the professionals and people in your life where they are. And I definitely take a stand to back and do what's right for children. And I could care less if it rubs you the wrong way. If you're a client of mine, if you're considering being a client of mine, hit the eject button because I don't care. It's coming down to morals at this point. It's just getting really whack. And the current administration, regardless of how you vote, is just shitty. And I'll be the first one to say it. And it's just really sad, kind of the stuff we're dealing with over the past couple days.
It's pretty wild.
So sorry to take it off onto the personal stuff. I know we're talking about finances on money moves, but this kind of stuff can affect your money in the long term.
Yeah, I mean, at the end of the day, when you think about the policy and who's creating a lot of the policies, and a lot of the ideology that's rooted in certain policymakers, it really goes far beyond your bank account.
Yeah, we have a mental health illness in the United States. There's not an equity problem. There's not a equality problem. People that are spewing that crap are completely coming out of left field with a bunch of stuff. And it's so crazy because it's almost like the shoe was on the other foot, and it was we'll use the chip of it was hard to be an African American coming up in the United States because you were supposedly looked down upon and that kind of stuff. And I'm not just pointing out one ethnic group or racial background. But now it's started to become where if you're a white male, that's almost the most evil thing you can do. And I think it's just becoming a little bit ridiculous. Some of the stuff I'm seeing, I've had people tell me that I have white privilege, which is just ridiculous. You don't know how hard or what I've done to grow my company or make my business what it is. So go get a job, stop complaining. Those type of people are never going to be successful in the long term. And I just hope we can make a turn pretty quick, and people are starting to, like, on both sides, people are starting to see what's really kind of going on.
Yeah, I would say
for some change.
Most of the people who listen to our podcast, right, are obviously capitalists or entrepreneurs or individuals who look at hard work and, getting out and earning what it is that you really want, not just getting a handout or a hand up for it. And so I think, when you think about everything that's going on in the country, it can be pretty heavy at times. And at the same time, I think there is probably more so of an opportunity and a platform for real leaders to step up and to show up and to
Amen.
do and say what it is that sometimes may rub certain people the wrong way. And yet, in those times, I think it's more necessary than ever. And I think we're unfortunately in those times. But let's move more
Sorry to
to
money.
a lighter
Money time.
topic in terms of, money topic. We have the inflation data that came out this last week.
Yep.
And we saw that PCE was a beat.
It was about 10
Better than
basis points.
expected.
Yeah, 10 basis points below, which it's normally that's not would be not a good thing, but it's what it leads the Fed to do based on the data. So sometimes bad news is good news. That was similar in 2020. We were looking for the same thing. The more bad news that came out, the more they were going to print money, and so that was kind of the thing. Same thing there. What I'm trying to figure out, we have money market deposits at an all-time high.
Yep.
We have people starting to switch out of treasuries because they're kind of feeling like the interest rate cuts could be coming at some point sooner or later, and bonds have an inverse relationship to interest rates. So this perfect storm is starting to brew, and it's so the stock market and the bond market are pricing in a Fed pivot, which I don't think is going to happen. I can't make a decision still on whether they're going to raise one more time and then pause, or if they're going to pause and continue to pause. My hope is that they pause and they let things kind of play out.
Well, with the beat, right, you got 0.4 was expected. It came in at 0.3. We're at 4.6% year over year inflation. So it's not as bad as a lot of people are saying it has been or is still currently. Therefore, it could lead to the Fed saying maybe we do.
Well, you got
pause
people
for a little
like
bit.
Peter Schiff who are coming out and they're like,
Oh,
"Oh
God.
yeah, now from now on, all the inflation numbers are going to come out hot." And it's like, how can you say that when 30 days ago we were at 6-point-something% year over year inflation, and we're here almost 100 plus basis points down, continuing trend down. We did have OPEC meet, and they did decide, independent of what the U.S. would prefer, to cut oil production, which is going to spike the prices because it's going to tighten up demand. We saw oil jump back up to around $80 a barrel today. I'm not sure where it ended, but energy and utilities were leading the market today by a very wide swath. That's why you saw the Dow up almost 1%, or if not 1%. S&P up about 30 basis points, and the NASDAQ down, I think, 60 to 70 basis points. This is on Monday. It's a very interesting time, but it looks like people are rotating out of, like I said, some of the tech names, even though I still own some of them for my clients, and going towards names that are going to be resilient during higher and stickier inflation than some are might be expecting. And it's just the tech companies aren't going to be able to make the type of money they were making in the past 10 years because the money costs too much.
And the landscape is just different right now.
It's completely different. And you have names that have had super, super aggressive recovery, like NVIDIA, Palo Alto Networks, like Facebook, Meta. And you have to be careful jumping back into those names because a lot of them, and I'm thinking like particularly maybe NVIDIA might have another kind of pullback time because they're very much integrated into selling people like graphics cards. That's their main business, and things are moving away from graphics cards and stuff like that, and they're more going on to like virtual reality, augmented reality. How can this help the image processing for that type of stuff? And it's kind of anybody's guess who's going to be the winner of that right now. I know AMD made a decision a long time ago to really get ready towards that and sacrificed company growth for and let NVIDIA kind of take that cake. But I think now, and this is a specific company we're talking about, they're so entrenched in that they have very narrow moat coverage, meaning they're really, if this business sector doesn't do well, there's not a lot of revenue to be generated by the company. And that can cause an aggressive pullback, especially when if they do need to get money on the shorthand, they're going to have to lend it, and they're going to not be able to get it at 0 or 0.5% or 1%. They're going to be able to have to pay money on that. That's going to come off their balance sheet. So interesting times. It's I was saying this last year, all year, and it's even more so now important, but you have to buy quality when you buy the majority of your investments. It's okay to speculate with a portion of your portfolio, but having 100% of your money into like meme stocks or technology names like Tesla or Nvidia or Snowflake or things like that, those are prudent in the short term for small pieces of your pie so that you can have a higher than normal rate of return.
Mm-hmm.
But when you're so used to like winning at the casino, you never think you're going to lose until you lose. And then you go in again, you lose again. And there's a reason that the casinos always end up making money. It's because that euphoria takes a hold of you and squanders your judgment. So, diversification, buying quality. Don't be afraid to have a couple of those ETFs in there. Have a couple ETFs in your portfolio. It's not a huge problem. It's okay to just be diversified, not have to over speculate on anything.
Just playing the long-term game, like you said, right?
Correct.
I mean, of course, there's going to be short-term, opportunities to come up big, or short-term, seasons where you might be coming down a little bit. But playing the longer-term game with a longer-term lens, I think, is ultimately where people win the wealth game, the money game.
You did not,
as a whole.
You did not pick a 12-month period of your investment career and say, if it doesn't go good in this 12 months, I'm done, right?
Right.
I'm hanging it up. That's just not how you do successful investing. You say, this is going to work. This is how I'm going to do this. This is the way it's going to work, and I see it working. So if I do these things and I don't execute, how can I go back to the drawing board and tweak things so I can get to the point where I'm executing and I'm dominating, and then I become the person in my field, and I'm the expert in my field, and I'm teaching other people. But it's not this. I always say it, this like slot machine mentality. This isn't working. I'm going to go on to the next get rich quick thing.
So in the week ending March 25th, the advance figure for seasonally adjusted initial claims was up to 198,000. We're starting to hear more and more, larger tech companies still, right? Not your...
McDonald's announced some layoffs today.
We're hearing more companies starting to tighten up a little bit, get a little bit more stringent in terms of the work from home policies and pulling people back in. So in terms of unemployment, what's the overall thoughts around where it sits at and where it's trending towards, and what are you paying attention to on that front?
Well, we're at historical low inflation levels. I think we're at inflation. Good Lord. Unemployment. Yeah, I wish. Unemployment percentage. I think we're about 3.5, 3.6, somewhere in there. We're not going to remain and just keep at a historically low level forever. And through multiple different presidents in the past, we've had varying rates of unemployment. There's no issue if the unemployment rate went up by another 1 to 2% and got to a normal range. It's okay and normal for us to have around 4 to 5.25%, maybe even 5.5% of our population unemployed and looking for jobs. You have to remember some of that percentage is also going to be people that are temporarily employed. And so it's not like, hey, this is 100% of the people that are actually on benefits right now long term.
Yep.
So I do think the unemployment rate is going to go back up. I do think the second it goes back up, even by the skin of somebody's teeth, the media is going to jump on it and talk about how unemployment's spiking again, and it's going to cause a rise in short-term decisions being made by people, and it's not really going to pan out to be anything in the long run, because it's okay for unemployment to go up by another whole 1%, and we'd be back into a normal range. So that's where people need to be. I said it the other day on my Twitter. You have to be so careful where you get your investment information from. Because, I can go on Twitter and just go through the finance section, and there's people posting charts and talking about how, you see the MACD, the MACD is this, and the RSI is this. If it was that easy, everybody would be rich. It's not. You can't just look at lines on a chart, because I do it all the time, and sometimes it means something, and a lot of times it doesn't. You can't make decisions based on what's happened in the past off of a brand new consumer in a totally different year doing totally different things. The other thing I've been seeing a lot of is everybody talking about how every time the Fed pivots, there's been a recession. Well, yeah, but there's never been a recession during the time of high inflation like we went through, no matter what the current administration wants to say. It's not a recession. It 100% was. And we've never been in a time where we had high inflation, so we're going to cut rates to get back in line. So I don't think that it's very accurate to say, oh, look at all these run ups in the market. The stock market didn't run up for the past 15 months. It hasn't. It's actually done quite the opposite. And so to say, well, look at what this has happened in the past, there's going to be a Fed pivots, and right after the Fed pivots historically, we have a pullback in the stock market. Well, sure, but you also could get ninja loans back in 2006, and you had hundreds and thousands of internet companies that existed in 2000, and you had another thing that happened in the 90s, and you had that other thing that happened in the 70s. It's not relevant anymore. It's already done and gone, and things have changed. A 2008 crisis can't happen again. We don't underwrite loans for people like that anymore. So it's as exhausting of a narrative to go through as people talking about the housing market crashing. And I think there's been a lot of spotlight on commercial real estate prices right now because more people working from home. So they're giving up the leases, and so they're going to have to repurpose a lot of these buildings. These sales forces are not going to have 81 floors of employees on them anymore.
No. Yeah, I mean, I think we're just going through
it's a shift.
It's a transitionary shift.
Yeah,
I mean,
guess what? When the fucking car came out, people were freaking out that owned horse farms.
Yep. And I mean, AI is bringing in a whole different layer. The pandemic brought in a different shift. And now there's as people react and the pendulum swings one way, as time plays out, generally it finds a way to swing back in some way until it starts to find its, equilibrium somewhere in the middle. We're kind of getting to the tail end of that, it feels like, on the pandemic. Now you got AI coming in and bringing a whole new different challenge and opportunity to the labor and the workforce. So I think you got to keep a cool and calm head when you're looking at a lot of this stuff, and also know that it just doesn't happen overnight, right? It really does take some time to play out. Real estate, obviously, way more time than the stock market.
If you read it online, it's old news.
And
I don't know how to make that as clear as the bell.
As you've said it before, thank God in real estate, there's not a ticker for real estate, because
best thing we got is the Case-Shiller.
Yeah, and that's usually 90 days of data in arrears that we're all sifting through and kind of, playing catch up with. So I think there's definitely some opportunities that are going to be coming, like you said. If you're in commercial, office being the most obvious one, a lot of, opportunity to repurpose, creatively some of those spaces. We're seeing in, the multifamily sector, there's more multifamily houses under construction than any other time in history right now. So depending on when that's delivered, and the only uptick in terms of dangerous delinquencies that we've seen from Black Knight data has been on multifamily. So there could be a little bit of a storm brewing on multifamily, as it obviously was super frothy, way overbought.
Yeah,
obviously overbought. Shelter and rent prices and housing being such a critical piece of, our human nature, as it being a complete necessity.
It was operators.
It was the safest asset class during the pandemic. When you would normally buy at a 6 cap, they're selling at 3.5 caps. Of course, that had to get to a point where, as rents started to soften up a little bit, as more inventory hit online, right, we saw caps starting to expand a little bit, and that's probably going to swing back. But again, I don't think there's going to be anything catastrophic there.
Nope.
That being said,
just bad operators getting exposed and good operators taking advantage of it.
Yep. And, right now, based on where the single family market is at, I mean, many homeowners, including a lot of baby boomers who locked in record low mortgage rates in recent years, they're not in a rush to sell their house.
Yeah,
so
we're not refining either.
No, I mean, there's no point to do that. So, inventory in single family, at least April 3rd, weekly update, inventory decreased 0.8% week over week. It's still over 50% lower than where it was pre-pandemic levels. So again, not really any concerns there. Now we're seeing, pending home sales. They've actually, based on February's numbers, they rose modestly, 0.8%. Now they're down 21% year over year. But again, we knew things were going to slow at some point. as rates started to tick up last year, and now that they played, themselves out to where we're at today, we've just seen the velocity of transactions slow down, but pending home sales are still relatively strong and stable based on what inventory is actually hitting the market and getting absorbed into contracts. So no concerns there. Mortgage rates are, between 6.3 and 6.5 right now, depending on, where you decide to lock in.
Yeah.
I thought this was, an interesting stat or I guess comment was this is from Nadia Evangelou, who's a senior economist for the National Association of Realtors. And she said, although there were some calming in the market after a recent bank shock, which obviously that narrative, where'd
That
that
was a
go?
load of bullshit.
That
Just like I've been saying,
that was
and
fast
I
to come and fast to go.
I told everybody that wasn't going to be anything.
But
And
it obviously created some ripple effects, and mortgage rates continued to drop after that. According to Freddie Mac, the average rate on a 30-year fixed mortgage fell to 6.32% from 6.48 in the first week of the year. Thus, buyers were able to lock in a lower rate by the end of the first quarter. Meanwhile, we're midway through the transition. I think this also ties into what I am seeing in terms of maybe job openings and the unemployment rate, being as low as it is. We're halfway through what they're calling the transition of baby boomers into retirement. One of the most interesting generational trends. This trend has already impacted the real estate industry. According to NAR, baby boomers dominate the housing market, representing the largest group of home buyers and surpassing millennials. This demographic shift is bound to be observed in the real estate market for the next decade. About 20 million additional households will be older than 65 years old by 2030,
that's
with
silver
nearly 80% of them owning their home. 80% of them owning their home. Baby boomers have substantially more wealth than younger generations. So with all of that kind of coming into play right now, there are honestly a lot of backstops and a lot of moats built around a lot of strong, key, foundational financial pillars of our economy.
Yep. And we talked about this a couple years back, in how 2030 through like 2035 was going to be a huge
the silver tsunami, like you were saying.
The huge transition of wealth from generation to a next generation. And I think the thing that gets overlooked on that is, on my side of the street, it's, all these qualified accounts and inherited accounts have to be liquidated in 10 years to non-spousal beneficiaries. But on the other side, there's going to be a ton of real estate and 65 plus communities, and I don't know what's going to happen to them. There's going to be there will be more goods than demand for those goods. So I see that as being probably our next big real estate volatility zone, is somewhere in there, because if you're 55 plus community and you die and you need to sell your house, somebody that's 55 plus has to buy it and want to live there.
Yep.
And that to me presents a big risk, because we have so much of that demographic in the next 10 to 15 years that's going to be transitioning their assets to their heirs. And essentially you get stuck with between a rock and a hard spot in that kind of situation. So I'm hoping that it doesn't present any huge issues, but people should be planning and making note of the fact that in 7 years or so, we're going to start seeing a huge transition in the marketplace, and you're going to see a shift from purchasing power from that generation to probably my generation, your generation, to millennials. Yes, because they're going to get the assets. They're going to start being aged into their careers. Their income should be higher. The generation that I'm worried about is Gen Z, because they don't save anything and they rack up credit card debt and they just run it. I never thought that I would see.
It's going to be really interesting.
College kids finance burritos. I'm not kidding you. I saw a post of somebody financing a Chipotle burrito for $2.85 a week. That's ridiculous.
He's paying off that $14 burrito.
Buy the damn burrito or don't buy it. But what are you financing a burrito for? This is where it comes to.
Do you think that Gen Z is less or more financially literate, even with the tools that are out there and available today?
They're the dumbest generation. And my brother is in that generation. idiot. I mean, like, he is an idiot when it comes to money. You want to know why? Because my generation, we were fairly independent. You and I, when we got to the point where we could ride our bike and leave the house, we did, and we didn't have cell phones. We had to learn how to communicate and live life like a regular person.
Yep.
Gen Z, they're the most socially awkward people I've ever ran into in my life. They're so used to digging their head behind a keyboard or a phone. They have all these made up, I mean, they're a bunch of hypochondriacs. Oh, I have stress. Oh, I have this. Oh, I have that.
You're not lying.
It's a bunch of
I wish
it's
I
a
could
bunch
say
of
you're lying.
babies. And I mean, they're really like garbage. It's the blue hair, yellow hair, green hair generation. It's the weird let me turn a college campus into like an anti-free speech, and if it doesn't agree with me, it's violence. They're a pretty shitty generation if you're asking me, and I know it sounds ironic coming from the generation before. That's what we all say, but good Lord, it's kind of the writing on the wall. Worst with money, worst out of all the generations before them.
Well, it's almost
They're
as
the
if they
worst.
don't care about it.
They
It's
don't
like
care
it's
because
demonized.
because they're millennial, and some millennial parents and baby boomer parents, they're coddlers. Instead of doing the hard thing, and what happened when people used to spank their kids and stuff, my parents whooped my ass out of the purview of everybody else. I mean, who didn't? You find a successful person, you go ask if they were coddled, and you're going to find a very small percentage.
It's very small.
Mark Zuckerberg, maybe. I mean, you're not going to find a ton of people that were coddled into being successful.
Yeah.
They have gone through strife, they have gone through hardship, and they've learned how to be successful through those times. Gen Z, man, you are dropping the absolute ball. And it's sad because you have so much more of an advantage to having technology, and you abuse it, and you overuse technology, and you don't use your brain. And that's the sad part about that generation. So they're the worst from investing. They're the worst from social habits, and they're the worst for setting up the next generation because they're just going to take those habits and run with them and make them even worse.
So let's talk about that a little bit, because obviously there's concerns about future generations, right? Not having the right mindset, the right disciplines and habits when it comes to continuing to take the baton and the torch of so many generations that have worked so hard before them to build and accomplish what many of us and many younger generations get to enjoy today as if it's just natural, and not understanding the progress and the sequence and the hard work and everything that's gone into
My parents never
what
did
feels like second nature for them,
My
right?
parents never did any of the stuff that Gen Z expect of their parents, ever.
Yeah.
Like, my parents were in charge, and they made all the decision. I had a job. I wasn't fed money. When I was wrong, I was punished, sometimes physically. It's called normal.
It's just different nowadays.
Yeah, it is. It is. Everybody's soft.
And it feels like capitalism really is under attack. Capitalism is being demonized. It has become something that many younger generations look at in such a negative way.
I mean, look at Gen Z. They're a bunch of fat, glasses wearing because they stare at their phones too much, hypochondriac weirdos.
Tell us
go
how
to
you really
go
feel,
to
Breedwell.
go to a college campus. I mean, they're weird. And with no life experience. I can put myself back when I was 21 and 20 and 19, walking the campus at Sonoma State, thinking that I was the shit. I mean, absolutely thought I knew what was going down. I was living by myself. I didn't know anything. I couldn't even set aside $5,000 for taxes. When I got my first job, I didn't even know how to do that. And now we got this other generation who's definitely worse than where I was. If I'm looking in the mirror and saying, if I was there, could I be here right now? Absolutely not. And it's because people are they do things so ass backwards. It's sad, but it's the truth of what's going on nowadays.
So let's think about that a little bit, because, there have been a lot of concerns recently in the media about the US dollar. And so I want you to break this down for us on the realities of it now, short term, and maybe even longer term, with future generations coming down the pipeline that are thinking and acting certain types of ways about money and about monetary policy in general, and then just capitalism as the whole of our country and what feels like little tiny chips away at the foundation trying to erode it away. We've had many different countries recently start to kind of make some moves. And
What kind of countries?
so let's talk a little bit about that, because
Are
I think
they developed countries?
people are reading into headlines and have some concerns. Recently, you heard, China's yuan has replaced the US dollar as the most traded currency in Russia for the first time. The president of Kenya tells its citizens to get rid of US dollars. India will trade in rupees going forward, ditching the US dollar. So, to give you some quick statistics, the share of the US dollar as global reserve currency dropped to 58.4% at the end of Q4 in 2022. This was the dollar's lowest share of global reserve currency since 1994. The euro is the second largest reserve currency with a share of 20.5%. So when you hear statements like this and people are going, "Oh my gosh, is Russia and
What did
Japan and China and all of these potential world powers
Mhm.
going to surpass us and dethrone the dollar?" What do you say to that narrative?
Stupid.
Give us more.
Yeah, not backed by data. There's zero data that could even. It would be beyond, as I said to Matt, well beyond our lifetime and probably our children's lifetime. If everybody today made the decision to get off the U.S. dollar as a world reserve currency, they could totally do it. It would just take probably 100 to like 130 years. I'll remind you of some fun facts. The IMF just approved another loan to Ukraine. And I will give you an idea what denomination they approved the loan to Ukraine in. Dollars. The yuan could never currently be the reserve currency of the world and is laughed at, because if it was the reserve currency of the world, the Chinese government would have to stop pegging it and manipulating the currency, and it would crash the Chinese economy, because then people would realize what is actually going on versus what is shown to be going on. Third, India trading in rupees on their domestic business is completely fine. That would be like India freaking out about us settling all of our debt in dollars. I mean, what the fuck is going on here? They're in India. They're going to trade in rupees. It's that's their currency. So they're still buying US bonds. They're buying a ton of US military equipment, and they're buying it in dollars. So I don't really care what anybody says. And India has notoriously always made a business first approach. We saw it when they started buying Russian oil last year. They straight up said, "Yo, we don't support Russia and what they're doing in Ukraine, but we can't pass up the cost of the oil. We have to do it because of the cost of the oil. It's best for our citizens. We're a developing country. Sorry, not sorry. We're buying the oil." So they're not a country I'm very worried about. I'm definitely not worried about Russia. May I remind everybody that 30 years ago, Russia failed as a country. So they're about 30 years into being a brand new type of country, but the Soviet Union already tried this before. It don't work. China is too reliant on the U.S. economy to support itself, and therefore they're almost the enemy of my enemy type deal. They can't bite the hand that feeds. We can't do it to them very much, but we're definitely more in a position of power because we consume from them. If we just cut off consuming from them, sure, would our cost of goods go up? Absolutely. But as we can see in the past about 24 months, that doesn't really sway the U.S. consumer. They'll just buy less and continue to buy.
Mm-hmm.
So
and it'll crush them in the process.
It absolutely would. So all of this stuff about it's the same thing that I will say about the banking stuff. It's a load of crap. It's simply to get clicks and make you watch the news. There's no destabilization or dethroning of the U.S. dollar. It's not going to happen. People can talk and say or do whatever they want. But the International Monetary Fund is who's going to make the decision. And I guarantee you they're not going to go off the U.S. dollar. Guaranteed. It's not going to happen. But if you believe that it is, you probably have 50% of your portfolio in Bitcoin. So you know what? You can lead a horse to water and you can't force it to drink.
So even with, BRICS nations, Brazil, Russia, India, China, and South Africa.
Who are those? They're not even important.
Russia
can't even beat a country 1/30th of the size of it in a war where you think I'm worried about that? They can't even handle their own business, and they're gonna dethrone the U.S. as the world financial power. Oh yeah, absolutely.
I think the biggest one is mostly China, right? People are concerned about China continuing to make moves that economically put them in a stronger position to
The funniest part about
cut US out of a lot of the,
the funniest part
international
about the moves that
trade. And
China's are doing is they think it's disinflationary, and the results of their actions are actually causing inflationary pressures in their economy. So it's not what, if you see it on the news, it's probably not true. Unless they say your name and it's your picture and you're like, wow, that's me. But if you get finance news from the news, first of all, it's old news by that point, and you're just as good as Jim Cramer, who we all know that he's garbage at making investment calls. But you can go listen to him all day, every day, talk about investments, talk about what to do, and he's typically pretty much 100% wrong. Those are the type of people are getting their investment advice from, and it's shocking and it's sad that people would, a program that on Monday will tell you that there's a massive market sell-off, you need to be positioning for something, and then on Friday tell you that the market's back in a bull rally, you need to buy. It's just kind of ridiculous. It's entertainment. You have to stop treating your investments like an entertainment thing or a slot machine. Buy quality, buy long, don't sell. Get rich.
I love kind of going back to timing of the market, and we can wrap it up on this. Sir Isaac Newton's nightmare.
Oh yeah,
do
the shipping company, right?
South Sea stock.
Yeah,
December 1718 to December 1721. So this is kind of a 3-year timeline.
This will be the same story as Bitcoin too, so listen close.
So Sir Isaac Newton invested a bit in early of 1718, and he exited relatively happy with a small gain when people started telling him that, hey, the market's getting a little volatile, you should probably get out. So he got out. Then he saw a bunch of his friends who stayed invested the whole time getting rich, and the market continued to climb, was getting hot. Does it sound any bit similar to what we've experienced over the last couple of years?
Yep.
And so he re-entered the market when every newspaper headline was talking about how hot the stock market was, and this South Sea stock was the one. So he got in with a lot of his overall financial capacity invested into this one stock, and it tanked in late 1720, early 1721. He exited at 3 points, each one as a lower leg of the stock, and ultimately was worse off financially than he was when he began investing in early 1718. So it just goes back to that reminder of nobody can predict what bank is going to potentially go out like SBV, or what stock is going to split and crush it like Tesla, or what's going to go on with the Ukraine war. It's, if you're committed to playing the game, you stay in the game. Like there's going to be seasons where you strike out 2 at-bats, and then all of a sudden the next 2 at-bats, metaphorically, you get a single and you hit a triple, and all of a sudden you got a couple points up on the scoreboard now. But if you play the game for the entirety of the entire game, which again, when we're talking about the length of this game, I'm talking about until the day I die. So I'm staying invested the entire time until the day I die. Now, there will be strategic shifts and pivots and moves you make along the way.
Yes.
But you stay invested.
Yep.
And you keep investing more and more and more, because that's the investment that you want to consistently grow over time by remaining in the game. So I just think it's really important to remind ourselves that in light of whatever headline, good or bad, you're reading, to have a very sound foundational plan. And that's why I revisit that plan with you. That's why many people take advantage of the free financial X-rays, right? If you want that, X-ray 844-447-1555, to stay intimate with your plan and make sure that it's doing what it should be doing. And if it's
100%.
not, what are the tweaks or adjustments you make along the way, not stop doing, in terms of getting out and sitting on the sideline, but just making necessary adjustments and pivots, just as a good coach does with his players when they're not necessarily doing what they should be doing, right? To get better results. Let's try this. Let's tweak that. But they're not ultimately quitting the sport.
No, it's as simple as eating. If you stop eating, you're going to die. You just edit the way that you eat over your entire life to continuously be healthy and improve your lifestyle. You have to do the same thing with investing. It's not any more complicated than that.
So we're going to continue to stay in the game with you guys, for you guys, and hope that each and every week you come back and you step back into that batter's box with us. Don't forget to subscribe to the YouTube channel as well as the podcast. If you're not subscribed, leave a review. We appreciate it. It enters you in for a $100 Amazon monthly gift card drawing. And don't forget to check out millionairemindcast.com. We got all kinds of great stuff in the store and all kinds of resources online as well. With that being said, keep investing in yourself and your wealth on your march to $1 million and beyond. We'll see you guys in next week's episode.
Cheers, y'all.